Ahead. Joining us right now from J.P. Morgan's Private Wealth Management, Chief Economist Anthony Chan. Also from Ace Investment Strategist, Principal and Chief Trader Yu-Dee Chang. And Anthony, why don't we start out talking about the economy? We have a heck of a lot of numbers that are coming this week, but I guess the most important ones are going to be the Friday jobs number and the Thursday jobless claims report.
Yes, I think so. I think that Friday, or always during employment week, is the most important number. We know the census probably dropped about 116,000 or so jobs. It's that private payroll number that's certainly at issue here. And we know from the initial claims data, and remember last week's initial claims number doesn't really tell us anything about Friday's number. That tells us about the next employment report. It's telling us that private payrolls are going to be soft. How soft? Probably too soft for comfort. And in terms of what are the things that are going to move policymakers to make a decision, I know that people are anxious to say if private payrolls are down 20,000, 40,000, that's going to be the issue. I think it's going to be the unemployment rate. Even though that's a noisy number, that's the one that moves animal spirits. That's the one that moves consumer sentiment. So if we were to push that unemployment rate much, much higher, and what's the trigger point there? Any number above 10%, and I don't expect that number to go above 10%, but that certainly could be something that makes policymakers a little bit more anxious to move.
But is that only something that happens if it's a worse than expected number? I mean, if the unemployment rate drops again to 9.2 or 9.3%, do you expect to see any positive benefits from that when it comes to the markets?
I think so, because consumers to some extent may think things are getting better. I think that because that number is so noisy relative to the payroll number is actually the one we should be focusing on if we want to look at the fundamentals of the economy. But Main Street looks at the unemployment rate, and that's the one that drives those animal spirits or consumer sentiment to either start spending more, start spending less. So I think policymakers, and to some extent even the administration, would certainly be paying a little bit more attention to the unemployment rate. Now, we know that the seasonal factors would argue in favor of a higher unemployment rate this time. Hopefully not towards that 10% number. It doesn't look that way, but that could be the wild card.
Yu-Dee, we know that market psychology can be a little skewed and a little bizarre at times. Does the market want to see an improving job picture, or do you think there would be more of a knee-jerk reaction to the upside if it was a bad number and the market then thought that the Fed would be forced to step back in and ease monetary policy once again?
Yeah, you know, kind of interesting, Becky. As a trader, I think this is pretty much maybe on the short-term basis, it will be moving the market a little bit. But to us, 1 month of data is really not fundamentals. Maybe a string of data is. So to me, we're actually still looking to buy the dips in the market and selling the rallies. So basically, we know this is a jobless recovery. We've been knowing this for a while now, and we expect that going forward. I think that's pretty much the same sentiment with all the other traders too. So I think this month per se, not great numbers expected. I don't think there will be too much of knee-jerk reaction in either direction.
Hey, Yu-Dee, speaking of knee-jerk reactions, why is the yen strengthening this morning?
Yeah, isn't it interesting? I think they were a little disappointed saying the Bank of Japan didn't come out with stronger language. Basically, they actually said they're expecting maybe not an international intervention. So by doing this so-called quantitative easing, they just don't think it's going to be enough to stop the rise of the yen. As a trader, same thing. I think currency traders are vultures. We buy down to the trend. The trend, the yen, is higher, and the Bank of Japan is not that firm coming out and telling us that they will be intervening, trying to push the yen down. Thus,
vultures feeding at the carrion of the greenback, huh? Anthony, what's the bottom here? I've heard numbers like hitting the all-time low of 79.
Well, I think 79 is not a number that can't happen, but what encourages me is that the Bank of Japan is at least moving in the right direction. We also still need to wait to see what the extent of those fiscal stimulus packages are there. But if you look at Japan's history, historically, they've not been very aggressive, at least relative to the United States, with quantitative easing. So I think that the financial markets were expecting the possibility that somehow they would have been underwhelmed by whatever the Bank of Japan announced. And I think that after you saw the numbers, they certainly confirmed that view, that somehow it was an underwhelming response on the part of the BOJ. And not only that, but we know that the growth prospects for Japan have been brought down, so economic growth a little bit weaker, and somehow the reaction on the part of the Central Bank of Japan relative to the deflationary pressures are there, still not enough to get markets rattled enough to believe that something really significant is happening.
Anthony and Yu-Dee, thank you very much for your thoughts this morning. Coming up,
thank you.
Why Microsoft